Well, what a brilliant day it's been so far. We've had two keynote addresses, a fireside chat, six panel discussions, and we're now on to the seventh and final panel discussion of the day on the subject of financial services, blueprints for global regulation and adoption. We've heard quite a bit today about different industry sectors and how they relate to technology regulation. Financial services is a highly regulated and high risk and highly digitized sector. So there's a lot that we can learn from listening to experts on financial services. We have representatives of central banks, of banking authorities, and to moderate the panel, it's my pleasure to welcome Jannah Patchay, the Executive Board Director of the Digital Pound Foundation. So over to you, Jannah, and everybody enjoy this final panel of this amazing conference, and we'll see you in Brussels on the 23rd to 24th of September. Please do join us there. Thank you. And over to you now, Jannah. Thanks.
Thanks very much, Ben. And thanks so much for having us all here today. This is a really interesting panel discussion topic, and I'm really looking forward to it with a group of experts as well. So in this panel, we'll be talking about financial services, blueprints for global regulation and adoption. And we'll be talking about some of the developments recently in technology and its applications in financial services with respect to AI in particular, and digital money as well, and some of the challenges and opportunities that these two technologies bring, the challenges to regulating them, and how the EU in particular can remain a leader in the global regulatory landscape. So my name is Jannah Patchay. I am an Executive Director and Policy Lead for the Digital Pound Foundation, which is a trade association and think tank that advocates for the introduction of a well-designed digital pound in both publicly and privately issued forms, and a diverse, effective and competitive ecosystem for new forms of digital money in the UK and globally as well. And I'd like to welcome the other panelists on stage. Thank you. And I'm going to go around very quickly and give up each panelist an opportunity to introduce themselves and tell us a little bit about what their focus areas and specific areas of interest are at the moment. Karmela, would you go first?
Yes, happy to do so. Hello, my name is Karmela Holtgreve and I'm Director General at Deutsche Bundesbank for Strategy and Innovation. So we cover two perspectives mainly, and one perspective is how can new innovations on the in the market affect our mandate and how we need to react as central banks towards it or as supervisors. And the other aspect is, are there new technologies that we can use to make our own perspective and usage of processes, interaction with market participants, etc., more efficient, better, and smooth? So having both perspectives in mind when working with new technologies, and also with deciding on which technologies are so relevant for us as an institution that we really need to put strategic effort to. For sure, and we will talk about that later on as well, for us, one of our top priorities as Deutsche Bundesbank is the digital euro. But on the other hand, we have seen a lot of change in the financial sector through technologies. And we also see, and that's why I really like the headline of this panel, the financial sector is a highly regulated sector. And we are used to design regulation technology neutral. And I think this can be a very good and efficient blueprint for all the changes that will rise with further technologies in the sector in the next future. And we already see it with the EU AI Act, where it is risk-based and technology neutral, and it gives kind of clear boundaries. And within these boundaries, there is enough space to explore and develop innovation, which is super important if we want to stay relevant as a European market. That's on my side for the introduction. Thank you.
Thank you, Karmela. And Emoke, would you like to go next?
Thank you very much. My name is Emoke. I am head of EU Public and Regulatory Affairs at Worldline. I joined Worldline 2.5 years ago from the European Commission, where I dealt with digital transformation, democracy, and justice. And for us, Worldline, of course, we are generally very keen when it comes to advancing digital technology. And as such, digital euro is also our interest. And AI is, of course, a new buzzword that is not just buzzwords. We are working with it and we are experimenting. So both topics are highly relevant for us.
Great, thank you. Alain, would you like to go next?
Yeah, sure. Thank you. And hello to everyone. So Alain Otaegui, digital finance policy expert at the European Banking Authority. At the EB's digital finance unit, we are currently, of course, pretty much focused on the policy development around the markets in crypto assets regulation and the DORA, the Digital Operational Resilience Regulation. But apart from let's say developing technical standards and guidelines, we are also currently assessing the implications of the AI Act for the European banking sector, and also I'm coordinating a work stream on the DeFi and crypto lending and staking. So hopefully I can give this panel, I can contribute to this panel. Let's say sort of looking at or sharing insights on the most innovative parts of the European banking sector at the moment. Thank you.
A very interesting portfolio. And Michele?
Good afternoon. First of all, thank you very much for this invitation. It's a pleasure to be here. I am director in the payment services and instruments of the Bank of Italy. We are in charge as directorate of following let's say the fintech evolution. I would say that in our department there are two main pillars. On the one hand, we try to study and understand what is the evolution of the fintech market and the role played by the innovation and new technologies such as AI or quantum computing or traditional technologies when they can impact and restructure the chain of the traditional instruments. And also we are in charge of, let's say, organizing the call for proposal of our innovation facilitators, like our hub and also the sandbox. On the second pillar of our, let's say, mandate is mainly focused on payments, because traditional and innovative payments, because with that new technological solutions normally are, at least based on our experience, develop in the payment field. We believe that the payments are a little bit like, let's say, an important element to spur technologies and new technological solutions in other fields of financial sector. So from this point of view, we also are following in this moment, for instance, the negotiation at European level regarding the PSD3, FIDAR, and also we are following the digital euro regulation. So from this point of view, we try to cover both these two topics in our directory. Thank you.
Thank you. And so two very interesting topics we've got here today around AI in particular as an emerging technology in financial services, and digital money as well. And I know if we start with digital money, we will never stop. So we will start with AI and then perhaps bring them all together in a discussion of the impact of new technology more broadly on financial stability. I'm going to start with you, Alain. I know that from your perspective at the EBA, you've been having a number of roundtables with banks banks and with the private sector looking at the latest kind of opportunities and future potential uses for AI in the financial services sector. So what are we seeing emerging, especially as increasingly sophisticated AI models are coming to life as well? What kind of emerging trends are you seeing in the financial services space?
Yeah, sure. And indeed, maybe the first thing to say is that, of course, AI is there's a very big hype around the AI and even in the financial sector as well around the use of AI and Gen AI in the sector. But AI is not new at all. Even some of the let's say advanced AI techniques, such as neural networks, the research around them comes from, let's say, a couple of decades ago minimum. So, but here, but now the financial sector is sort of benefiting to the access to an exponentially larger set of data, increased data analytics capabilities, and the huge improvement in the in algorithms and in the efficiency of algorithms. So there are very interesting new AI techniques, but it's more about the application of those AI techniques within banks' decision-making processes that is mainly new. And as you were saying, probably it's the most interesting to focus on the latest ones, and why not say generative AI or general purpose AI, as the AI Act calls them. And then we could even say that we are entering the era of Gen AI. And what we organized very recently a workshop on generative AI, as you already anticipated, with a few of the large European banks, but also with the technology players and the consumer organizations. And what we want to do is to understand what are the actual implications and what are the actual potential opportunities for banks. And they see it as a very serious opportunity to improve the way they work, for many reasons. So they see operational efficiency gains, gains in risk management capabilities and product offering. So, for example, they see a better, let's say, pattern recognition ability. They see the capability to improve client experiences and also a greater accuracy and consistency in processing data. But basically, what we have observed is that there's four main use cases where they actually currently see the biggest opportunity. And when I say currently, is that this is also a very costly technology. So what we see is that they are trying to focus on those use cases where the opportunity is there already, where they can make current processes more efficient and leave more exploratory work for a later stage. So currently they are using it mainly for improving customer engagement. So I guess we all use virtual assistants or chatbots, both for customer but also internally, so to improve the experience with employees. Content intelligence, sort of this information summarization, finding insights where the human cannot detect them. Also content generation, so actually generating content that humans that it takes a lot of time to humans to actually create, and this in the financial sector can be seen in the form of creating advice, for example, and this is an advice that can consider and data that a human could basically, as I said, spend a lot of time analyzing. So unstructured data and the combination of multimodal data. So not only structured with unstructured PDFs, press information, Excel sheets. So so all of those types of data sets in one go, let's say. So this has some potential in credit lending, in credit risk and lending, and then code generation. So of course internally to improve internal processes processes, improving the code generation but behind software and processes. This has a lot of potential. So basically, what we see is that around half of the 85 of the largest European banks are already using or testing AI for these use cases, and that since the last year, the proportion of banks using or testing generative AI for these use cases has actually more than doubled. So actually, the adoption of this technology is very quick. They see the opportunities, and I think it's very important that we all understand where these opportunities come from and what are the challenges that we may face if they keep adopting this technology.
Thanks, Alain. And obviously, with such a diverse set of use cases and applications, there are all sorts of potential risks that can arise when you're looking at everything from large-scale data processing, content generation, and analytics. Potential investment decision making as well, and code generation. And Karmela, can you tell us a little bit more about the perceived risks and need for policy intervention with respect to AI in financial services, particularly at what's generally perceived to be such an early stage of its development? Why is it important that we start thinking about these things now before they are actually, live in the financial system? You're on mute.
No? Yeah,
yes.
Okay, perfect. I can fully agree on what Alain said. And I think what we see in the discussions with market participants and banks and fintechs is a lot of effort is put now into data governance, how to ensure good data quality, how to ensure data standards. Because if we rely more and more on data and even more and more on unstructured data, we need to know when is a data a good data and when not. And this is something that needs to be looked into very, very much, and it's a lot of work. It's not exciting work, but it needs to be done to really get the results out of the large language models or whatever AI you are using. And the other aspect we see very much as a risk that needs to be addressed early stage and that needs to be also implemented in the way especially Gen AI and large language models are adopted is the way how explainable is the AI approach, how explainable is and transparent is the usage of the data in the process. How can we really make sure that the human is in the loop and that when we look into a model, we can use the model and adapt the model and really be able to form a transparency on the AI used. And this is something that is not always there yet. And there's something that creates risk because out of this unconscious bias can rise or unethical approach of AI can come. And this is something that needs to be looked into very, very carefully. Otherwise, we may not get the results out of the AI we really want to have. And this is something we really look into very much. And the other aspects also, if we depend so much on technology and this field is rising and there are huge opportunities in this, there are also many risks when it comes to cybersecurity, ensuring systems, ensuring the usage of the data. So that also has high risk for financial stability, and that needs to be looked into very carefully. So I would say these are areas that we as central banks and supervisors look into quite a lot.
Thank you, Emoke. Thank you, Karmela. And Michele, would you like to come in on that at all from another central bank perspective on, the need for regulation of AI or exploration of regulation and policy interventions in AI at this stage of their introduction to the financial system?
Yes, preliminarily, let me say that I fully share what Alain and Karmela just said, okay? Both from, let's say, the opportunities and on the same times on the risk. Maybe just two additional remarks on this. We are studying with the Italian, let's say, banks, or generally speaking, with intermediaries, in order to understand what are the opportunities and also the risks. And one thing that I would like to share with you is that, for instance, artificial intelligence can be a very useful tool from a central bank perspective to detect fraud, in particular innovative frauds. It's also an important topic that in the banking and in financial sectors we know that it's important to take under control. This is one possible implications that with artificial intelligence we need to take into consideration. Second aspect that we are trying to understand better is the application also of artificial intelligence for from a supervisory perspective, because is a very useful tool also from our job. This is something that also we need to take into consideration. And the importance of artificial intelligence from a central banks can be, let's say, observed. So if you may allow me to share that 2 years ago, with our innovation hub, it's called Milano Hub, we launched a specific call for proposal focus on artificial intelligence in order to study close with Italian and foreign counterparties the implication stemming from the application of algorithms. So from this point of view, in order to better analyze the risks and the implications of the artificial intelligence, we launched this call for proposal. We collect more than 40 projects. At the end of the day, we admitted in our hub and we try to help these companies to develop their project. It was also a very useful occasion to us to understand better what are the risk and the opportunities, because as usually the devil is in the details. And honestly, having observed the algorithms and the artificial intelligence, I believe that it's very important to take into consideration, so say, all the different aspects that there are behind AI systems. Thank you.
Thank you. And Emoke, coming from the private sector and practitioner perspective, and as someone who's involved with a company that may actually be trying to look at applications of AI in the future, what do you think are important considerations in the development of regulatory frameworks around AI, particularly when it comes to balancing opportunities for innovation in the commercial sphere with protections, particularly of consumers and data and that sort of thing?
Thank you. The speed of AI innovation and its impact on society, we can see it's extremely high. We heard some statistics earlier. And just to start with the story, a few years ago, as head of AI ethics within an international organization, I had the role of connecting female AI experts from Ericsson, IBM, Meta, and so on, with AI ethicists and decision makers, to make these experts aware of the ethical standards and help them to prepare for the new regulation. So the awareness that time, this is just 2 years ago, has been quite low within the expert community. And today, 2 years later, we have Salesforce data statistics that says that 49% of the population is using Gen AI. One third of them are using on a daily basis in Europe, and 77% of the businesses reporting either using or experimenting with AI. And previously we heard 85% of the EU banks. So these are very high numbers and show the speed of the innovation. So we have new horizons ahead of us. What I can imagine on the payment front as the next step can be that AI will be able to pay autonomously on our behalf, recommend best payment methods, optimize our money management habits and investment plans. When it comes to our own company, we are, of course, experimenting with AI. At the moment, we are very much using and trying to find new use cases for biometrics and fraud detection. It works very well at the moment. So, for instance, we all have habits when it comes to our phone, and we analyze the patterns and tell whether from the interaction with your phone, is it you who is using it or is it a fraudulent person? And in case we detect the patterns might not be your patterns, we can block these kind of transactions. So from the speed, from the way you type and behaviors like that, we can analyze the data. So overall, we believe that AI is a great opportunity to make our life easier, but also it's an opportunity to make our life miserable if we don't watch out. So there are risks due to the fast evolution of AI, and there is a gap, we all know, when it comes to catching up with the regulation. For instance, when it comes to fraud management, Jannah, we know that they can already fool some voice authentication services. In the last 1 year, deepfakes have been increased 10 times, which is a problem for the industry, but also a bigger problem when it comes to elections and democracy. Second, the environmental impact. We are not aware of it, or we are very much in the beginning of being aware of what this really means. For instance, I just recently learned that making an AI image uses as much energy as charging an iPhone for a couple of hours. Yes, we have to educate ourselves, and we have to educate consumers on their behavior to avoid overusing AI. And here the risk side, the last part is data accuracy that I wanted to bring up. We heard earlier from Karmela that good data is very much needed. So we know that Gen AI is reproducing statistically probable content, and large language models tend to hallucinate when they don't find the right answer, and they do it very confidently. So hallucination might be accepted when I am looking for sort of what to have for dinner, but when I am looking for an answer where to put my life savings, in what kind of investment, it's not that much accepted. So these are the kind of risk that we need to watch out. Of course, there are many more, but these were that I wanted to bring up. And when it comes to the future of AI, the AI regulation, yes, we have at the moment a very good basis. We have risk categories, we are regulating the ethical use, but when it comes to the actual technology, there is still much to be done, and this will be most probably the job of the next commission, the regulators. They are already deliberating whether a new regulation is needed, and chances are that they will go for. And at the same time, we also mentioned the data and data economy. We all know that we have the ambition for the EU to turn into a data economy by 2013. At the present, we have many regulations, data-related regulations at different places, but there is no harmonized approach. For instance, just in the financial sector, an example, the data provisions in the FIDA regulation and the PSD3 PSR are not properly aligned. And we know that most economic activities in the future will depend on data within a few years. So if we really think about this ambition seriously, we really need to create alignment and harmonization. And for me, the immediate next step, if I was somebody on the top of the European Commission looking for a solution, would be to create a portfolio of a data and AI governance commissioner for the next mandate, so that we can harmonize data provisions across the legislative files and ensure consistency for the next 5 years.
Thanks, Emoke. I'm very conscious that we've got about 13 minutes left, and we haven't even touched on the subject of digital money yet and the digital euro. So I'm going to ask, I'll give a brief introduction to the topic, and then maybe we can keep answers a little bit shorter, because it would be great to get onto some of the financial stability topics as well. But I think given AI is such a new and nascent area, it's been really good to hear all of your comprehensive thoughts and views on what's happening in the field of AI regulation so far. So we're, since the announcement of Facebook's, what was then Libra, back in 2019, we've seen an explosion of discussions around central bank digital currencies and other privately issued forms of digital money as well, such as stable coins, tokenized deposits, tokenized e-money, etc. And this kind of emerging landscape of new forms of digital money. The discussions around the digital euro, the euro CBDC in the Eurozone are fairly well advanced, particularly in comparison with discussions of CBDCs in other parts of the world. And in terms of what's happening with the digital euro at the moment, it is a central bank digital currency. It is issued by, in this case, the ECB and central banks. And to some extent, at one extreme end of the spectrum, you could see a CBDC as disintermediating banks and financial institutions. But this is not the view of the ECB or the European Commission in introducing a digital euro. And so what opportunities do you see a digital euro bringing to the Eurozone from a policy perspective, Karmela? And then I'll move on to Emoke, perhaps, to come in on more of the commercial opportunities perspective. But let's start off with you, Karmela.
Yes, happy to go into this topic, which is very important to us as central banks, given that the world is becoming more and more digital, and we do provide cash. We also need to provide money in a digital world, and this is our answer. So a digital euro, a digital CBD euro, is the digital equivalent to a euro. A euro is always a euro, be it in form of cash or be it in the future in the form of a digital euro. This is very important to keep in mind. And it's really about complementing banknotes and coins. And it's not about being a contrast to it, but really a complementation that can give people an additional choice about how to pay in a very secure and safe way. We are not interested in any kind of data out of the people. So we will have some kind of checkings on fraud, as Michele mentioned, but otherwise we do not care about for what it is used. So it will be very safe. Privacy is something that we very much look into, because it is a big concern within the European Union, also for everybody in Germany especially. We see this as a very major point of why do we really need it, and is my privacy secured? So we see a huge need of explainability on how the privacy is ensured, and this is something we look now very much into in the exploratory phase we are now conducting together with our colleagues from the Eurosystem. We have a strong engagement of various central banks, the strong engagement of the ECB. It's really a joint effort to create something that fits in a digital world. And there was just 2 weeks ago a paper published by the BIS in Basel on the Finternet, kind of a vision for what is the future of different digital ecosystems and digital financial systems working jointly as the internet. And this is based on the idea that CBDC will be there, that digital money is there, and that we will see new ecosystems on the horizon, and that these ecosystems need to work properly jointly. So I really think that next to the strong exploration and preparation phase we are now conducting, including a rule book, really strong guidelines on privacy, all the issues that we need to look into, we also need to keep in mind on, okay, if the digital euro is there in a time being, what kind of ecosystem do we need to create? What is the ecosystem we do want to work then in within a really pan-European approach? And to keep it short, I will stop here.
And Emoke, what kind of commercial opportunities do you see in the introduction of a digital euro? And as Karmela was talking about, that ecosystem that will need to exist around the digital euro, providing services and products in it. And again, I'll ask you to keep your answer fairly brief. Yeah.
Yes, thank you. I will try. I very much agree on many of the aspects that Karmela brought up. I would like to bring up the letter report, which was recently published. I find it interesting because regardless whether we stakeholders are in favor or against the digital euro, the argumentation of LATA towards the need of a European payment solution is very pragmatic and very rational. And we have three facts today. Fact number one is that we are becoming increasingly digital. Banknotes and coins are declining in use, and we have no other form of central bank money to replace. Secondly, 30 years after the establishment of the single market, there is no European digital payment mean covering all the euro area, meaning I cannot pay with the same card most of the time from Sweden to Brussels to Madrid. I have to switch sometimes card to be able to do so. And thirdly, international schemes are operated by non-European actors facilitate 69% of all the digital transactions in the euro area, meaning that 30 out of the 20 countries rely only on international solutions. So the way we see digital euro can be a great complementary tool compared to other payment methods. Digital euro holds the promise of offering a universally acceptable form of currency all over the European economic area. And the technical and political aspects are very substantial in this process, but there is something else that we have to look at. My biggest worry in this process is that we have been discussing this project for 2 years. In the meantime, it became a story, a concept, even a religion. We are keep discussing whether we believe in it or we don't. But there is a gap in our understanding of the financial and economic implication. So the elephant in the room is the cost. There is no secret. We have to invest. PSPs have to invest to make this happen, but no one really knows the overall cost of this vision and whether it's really worth it. So for me, the viability of the business and the compensation model cannot be overlooked in this investigation phase. And we need a comprehensive analysis to make this really to make visible what are the impacts on the financial system and the overall economy. So yes, and once we have this kind of groundwork on the costs and the implication, only then it can be a really paradigm shift, as Leta said in the report, and only then can it reinforce the strategic autonomy, but we cannot step by this process. We have to look at the costs for the overall economy.
Thank you. And the remaining time, I think, bringing all of this together, it would be, the obvious possibilities when it comes to digital money, the digital euro, and AI, and other emerging technologies as well are significant. So we haven't even gotten into the broader use of DLT in financial services, for example, or what DeFi can bring to the table. But all of these also have the potential to introduce risks to financial stability and challenges arising from that. And so I'd like to finish off with Alain and Michele, your views on what are the challenges for policymakers when it comes to determining impacts and financial stability, and how can the EU continue to remain a world leader in, regulation when it comes to the application of new technology and financial services? And I'll start off with you, Alain.
Thank you very much, and indeed I will try to be as brief as possible. So indeed, there's growing concerns around financial stability risks arising from the increased use of technology in financial services. This comes mainly, I would say, from the growing interconnectedness and complexity of financial markets. As you mentioned, for example, DeFi, we hear a lot about non-bank financial institutions and their growing relevance, crypto, and DeFi being interconnected with the financial, with the traditional financial sector. Also, it comes from the concentration of market power within the hands of non-financial institutions. Dora and Mika try to address this, mainly Dora. Also, it comes from geopolitical tensions, increasingly affecting also the financial sector. But here, I would say that there's one main challenge, which is that there's enormous regulatory reporting, let's say, reporting gaps that make it very difficult for regulators and supervisors to actually assess these financial stability risks that may be building up. So this creates supervisory blind spots, and these financial stability risks may also come from from Gen AI and from AI in general. The let's say automaticity, speed, and network effects of Gen AI could potentially aggravate future financial stress episodes. So I think at the EU level, we should keep sort of trying to regulate by focusing on addressing immediate risks or in risks posed by material innovations first. This is what the AI Act has done, what Mika has, the approach followed by Mika and Dora, and I think this is the way we should continue collaborating cross-border, but also collaborating across sectors and trying to leverage as much as possible on our data and evidence.
Michele, coming in from the National Central Bank perspective, what would you add on those concerns around financial stability?
I would like to, let's say, put a lot of emphasis on the interconnection, the interlinkages between the, let's say, traditional financial sector and the digital sector, the digital ecosystem. So what we have ahead of us is a growing interrelationship between these two worlds. So just to give you an example, to be crystal clear, think just for a while about the wallet that you have when you are dealing with cryptocurrencies. And in some cases, this activity can be done also by traditional intermediaries. So from this point of view, for the financial stability, it's important to try to have an holistic approach, try to see how the different parts of the system can interact. So talking about, for instance, cryptocurrencies are exchanged in some cases on centralized exchange, where also traditional intermediaries can play an important role. So from this point of view, in the forthcoming years, maybe better to say months, I guess that we need to have an important look to the issue of the interlinkages between the different parts of the financial system. Last remark on this point: even if, although the digital part is small, just to give you an idea, when we are talking about, let's say, crypto asset and DeFi, we are talking about less than 2% of the total asset at worldwide level. What is important is not consider the dimension, but the interlinkages, again, small in this case does not mean that is a low level of risk. So it's important also to take into consideration this dimension. Thank you.
Thank you so much. And thank you to all our panelists for sharing your expertise on these topics. It's been really great today, and I hope the audience has enjoyed it and taken some insights away from it as well.
Thank you.
Thank you for the opportunity to stay here.
Thank you very, very much, Jannah. Thanks to all of the panelists there. It's kind of a microcosm, really, of the discussions that we've been having today, focusing on that one sector, financial services, and how they're going about adopting and regulating AI, and how they're integrating, or in some cases, perhaps the regulations don't mesh too well, is what seemed to be said there in relation to the horizontal and the vertical regulations that come into place. So it's down to me now just to say thanks to you all, the speakers, amazing speakers, and amazing audience that we've had today. Thank you all for listening. Thanks for your questions to the panelists. It's been revelatory. It's been an absolutely brilliant conference. Very much enjoyed it. And just very briefly, just to look at some of the key takeaways from the conference, really, just in a couple of minutes, and to look ahead at what's next as we look forward to RAID Brussels on the 23rd and 24th of September, which I'm sure we'll see you all there. So I think today there's been a fair amount of focus on how policymakers need to bring in measures that enable innovation and competitiveness that go hand in hand with regulations that ensure safety and fairness and stability and social good. And how that's achieved is really to do with communication between all the different players around the world. I mean, as Alain from the European Banking Authority said just now, we need to keep collaborating cross-border and cross-sectors, which is really what RAID stands for and has done since we launched it back in 2017. And it was particularly heartening to hear Monsieur Raffaran and several others today over the course of the day calling for a global annual event that brings together regulators, and sometimes the answer really is just staring you in your face. So we really look forward to continuing to build this fantastic meeting place of regulators and policymakers alongside other stakeholder groups to create systems that are going to work for all players worldwide. As other people have said today, the striking thing that's come across today is that we're just sort of at the start of the journey here. Regulation of AI, internet and data is not just something that has been happening over the last few years while the DSA and the DMA and the AI Act have been drafted, and now it's all regulated and we're good to go. This is just the very beginning. We've got a long journey together of keeping all of this in check. So thanks to you all for being on this journey with us, and look forward to seeing you round and about, possibly at CPDP if you're going to be there, and elsewhere, and if not there, then at RAID in Brussels on the 23rd and 24th of September. Thanks to you all. Thanks to Meta and KPMG for your support again, and thanks to all the wonderful speakers, Vice President Jourova, and with her opening address, Gabriela Ramos from UNESCO, and all the other amazing speakers we've had today, and for the audience. Thank you so much.